Are we well past the dip in house prices? Are real estate prices still going up? What about interest rates? I heard the Fed just raised rates, so what does that mean for mortgages? Did buyers miss their golden opportunity to buy, or is it still a good time? And what does that mean for selling? I get into all of that, plus the data to back it up. I'm Brendan Mohr, the Realtor, and this is the May 2023 Sacramento Real Estate Market Update. Let's go.
Welcome back, and thank you so much for checking out another one of my market updates. And if you haven't checked one out in the past, please, after watching this one, watch some of my previous market updates. I get into some great topics that really relate to a lot of what I'm talking about, even in this one, such as inflation and how it relates to housing. How when the Fed raises their rates, it does not mean mortgage rates went up. And that often, when the Fed raises their rate, mortgage rates go down, and why that is. I get it so often. I don't want to talk about it too much in this one because I've talked about it a lot, but because I get it so commonly, I do tend to talk about it a lot. Hey, I heard the Fed just raised rates. Oh my gosh, mortgage rates just went up. Nope. Fed rate, mortgage rates, completely different. And it does not mean that mortgage rates went up when the Fed raised their rates. And in fact, I'll talk about more about the Fed's recent rate increase and what that means. And I get into other topics about whether it's a good time to buy or not, and where housing looks in the future and where it has been in the past, and really how to look at house prices. A lot of people think that there's just these common dips, and there really aren't. We did just have one because mortgage rates went up a lot, and I'll explain why we're seeing house prices rise again. And I will get to answering each of those questions in my lead after I show you some fantastic data coming up in my next screen. Here we are in my first screen. I like to open up with Mortgage News Daily. It's a great surveyor of mortgage rates throughout the country from different mortgage brokers, as well as it shares financial news, and sometimes I share some of the articles on here. So you'll see up here the current average rate for a 30-year conventional mortgage is 6.49%. Now, if you're looking for a better rate than that, really, I have a loan officer and a mortgage broker who has wholesale rates. He just sent me his rate today. That was at 5.75%. So if you're ever looking for a great loan officer, please reach out to me, because often the average rate that I show on Mortgage News Daily is higher than what I can help you find through some of my resources and some of my very favorite loan officers. So you can see that this green right here, that actually means the rate fell a little bit. Now, getting into the Fed raising their rate 0.25%, everybody knew that was going to happen well in advance. And they said some other things like, hey, we're looking at it that inflation is still falling. It's falling at the pace we think it will. And they're talking about not raising their rate any longer. Markets really like that. So mortgage rates started to fall because the bond yield also started to fall because of that data. So I'm thinking that we're going to see rates stabilize around here and not get too much higher, which I've actually said for a couple of months. We did see rates above 7% for a short bit. And after it fell after that, I've been saying I don't think that we're going to see it up there. Now, there are some factors that can change that, different economic factors that we're just not seeing right now, but it's always possible. All right, so let me get into the tasty data that I like to share. So this is the trend reports for everything sold in real estate. I like to pick one county and really narrow it down to what is most common. This is Sacramento County on single family residences on a quarter acre or smaller. So the very first graphic here is the for sale, sold, and pending. So the number of homes that are for sale, number that are sold, number that went pending. Anything that's sold, that basically represents an offer that was probably put in the previous month. So in a way, it's kind of 1 month behind. So here we are for April 2023. So this goes all the way to the end of April because clearly we're in May. I don't have all of May's numbers. Month's not done. So we had 705 sold, but only 655 for sale. And the previous month, we saw 824 sold, 614 for sale. So the solds were actually down about 10% in number of homes sold, but it's because of the inversion of the for sale versus sold. So you'll see in all of the previous, or nearly all the previous graphs coming from, or months coming from, let's see, all the way from May of last year, there were more homes for sale than sold. So basically, the inventory keeps getting depleted. And because of that, there's just not enough inventory. That's why the actual number of sales have dropped, because there's fewer homes for sale that have sold. It's just the inventory is just going down and down and down. And you see this pending line is starting to flatten out. I think that for May, we're going to see sales rise a little bit because more has come on the market in May. That's a very common time for a lot of homes to come on the market, and they're going quickly. So let's see. This is average dollar per square foot, and you see that we hit a dip in January, which again represented offers really made in December, and we're on its way up to 323 a foot on average, which is equal to October. And if this went all the way back to January of 2022, you'd see it's about equal with that as well. So we're about equal to 15 months ago, when it was still rising. Now, I'm not expecting to get up to this May number from last year, 356, anytime really soon, but I suppose it is possible. But historically, real estate prices continue to rise, little dips here and there. So that's a 1.3% change month over month up. Okay, so now this next one is actually two different pieces of data here. The red line is whether a home sold for over or under the list price. And right now, homes have been selling for about 99% of the list price. So most often, on average, I suppose, under the list price. But I think that is still due to some serious reductions in price for some overpricing, because a lot of homes that I'm really seeing are selling at or above the list price. I'm not talking wildly above. And really, anytime you ever saw any of those news stories where someone got 100,000 over the list price, it is just because it was listed too low. And it started a little bit of a bidding war and all that. But every once in a while, someone would say, "Oh my gosh, hey, I just saw this house, this beautiful house with a pool for 400,000 in a nice community." And I tell them, "That's a $600,000 house. They're pricing it low. I understand why you're getting excited about that." And of course, you go there and there's just a line of people trying to see it. They're getting 25, 30, 50 offers, and that's what that is. Just because you saw a list price that maybe excited you doesn't mean that that's what the house is going to sell for. You see that more commonly in the Bay Area. Someone I'm helping right now, that sometimes will say, "Hey, there's $800,000 house. I really like to see it." Well, I just comped it out, and the view alone is worth $1 million. So then you see that it sold for 1.4 million. Really, really common in the Bay Area. Sacramento, not so much. We tend to be really transparent with pricing, but it can happen. So if it looks too good to be true, it probably is. Okay, so this next graph here is the average consecutive days on market. And even when a home is very, very popular, usually you see it's on the market for at least a week. And that's just because you want to give time for people to see it, to put in an offer, and even say you reviewed offers. Let's say you reviewed offers on Tuesday. Well, maybe you're countering several of the offers, so it might take, you send out a multiple counter offer. It might take a couple of days to review and get those counter offers back, and then for the seller to decide. So you might not actually put it into escrow, accept an offer until maybe Thursday or Friday, but the pending or the days on market are still going through that time. So usually you don't see homes like 1-2 day on market. Sometimes you do, but for the most part, it takes a little bit longer. Even when you see the market was really hot back here, 13, 15, 16 days in the early half of 2022. So we're at 39 days, and you can see that number has been falling. That's about even with October of last year. So we're seeing a fall month over month of 15% faster for a house selling. This next graphic, I don't really like to talk about it too much because it doesn't really tell me a whole lot, but it shows the average price for sale versus sold. And usually these lines are kind of following each other. And essentially you can see that affordability is maybe rising slightly, but
there's still the average price for home that is way above the affordability. Um, and that will lead to some of those longer consecutive days on market or home selling under the list price. This last one, though, is very very relevant, and I think maybe one of the most, if not the most important of the pieces of data here, because it tells you why house prices are doing what they're doing. This is months of inventory. So if everything on the market currently sold or there wasn't anything new on the market. This is how long it would take for all that inventory to be depleted. And right now it's less than a month, 0.9 months. So if nothing new came on the market, everything would be gone before the month is even over. That is very, very low inventory. You can see it's equal with the hottest parts of the market in 2022. And that is helping to keep prices up. And there's lots of reasons for that, but it's mostly because a lot of people are locked into mortgage rates at 3% or lower, and they don't want to go into a 5+6% interest rate. Plus, they're really not seeing something to move into because inventory is really low. One last thing I want to show you, because sometimes people are like, oh my gosh, there's going to be a crash. Okay, so crashes are really uncommon. There was the Great Recession. Before that, the Great Depression. There you have it. In the last 100 years, 2 crashes. And there were lots of reasons for those, and we're just not seeing those reasons today. Okay, so the leading indicator that a crash is happening is increased foreclosures. Okay, so here's the foreclosures for, let's see, it starts in 2007. And you see, and this is the Great Recession where it really starts to climb. Here's foreclosures way down here. You see, it's not rising really much at all, if any. Now in 2020 to 2021, there was a foreclosure moratorium where there weren't new foreclosures, very, very few, because you could basically not have your home foreclosed on during that time because of COVID. So we're only slightly above that. So foreclosures are allowed now, and it only went up slightly. So you can see that the market is really fairly healthy.
Well, what great data. So are we past the housing dip? Yeah, it does look like that, right? You saw it in the data. You saw the dip. You see it's rising. I think we're going to continue to see it rise. And that gets into that next question. Are house prices still rising? Yes, they are. It's very typical this time of year. And we might see it start to flatten out maybe in the late summer. Usually we see it kind of on a little bit more of an increase in September, October again, and maybe a slight dip in November, December. January's data usually shows a slight dip as well, because that tends to be offers that were accepted in December. But that's kind of the wave it usually goes in, but it's usually a wave that's going on, making its way up. So what about interest rates? Clearly, interest rates have sort of stabilized, and hopefully that registered with you that the Fed rate and mortgage rates are really two separate things. I think that we're going to continue to see rates somewhere around where they currently are. And if you do need a loan officer who will get you a phenomenal rate below what I showed you on Mortgage News Daily, that average daily rate, reach out to me and I'll just shoot you over his information. Just send me, I can just text you his contact info. And there's nothing that wouldn't be hurt by you just talking with them. Anyways, now, did buyers miss a golden opportunity? I don't recommend ever timing the market. You're gonna lose if you time the market, especially in real estate where dips just really aren't common. And you may want to believe that they are, but they just really aren't. I mean, crashes, there's been Great Recession, Great Depression, that's it for the last 100 years. And then every once in a while there's little dips, and in most recessions, home prices still rose. So no, I think that prices rising, as long as you can afford to buy, is actually a really good thing from a buyer's perspective, because you're seeing like, oh, I'm not making a bad investment, which I don't think buying a house is really ever a bad investment. I mean, you're buying something for yourself as far as a home goes. So instead of renting a house and essentially buying a house for somebody else, buy your own. No, I don't think you missed a golden opportunity, but I think right now is the time to do it. Because if you wait, I think you're going to find that real estate prices are even higher. And if you're thinking about interest rates, well, that's what refis are about. If you're thinking that you don't want to lock in such a high interest rate, you think that interest rates are going to be lower, well, you could always refi. Um, Interest rates may get lower at some point, but probably not in 2023, and who knows, maybe in 2024. Now, when I say not much lower, I mean rates fluctuate by small percentages. But if you're looking on getting into the 4%, we might not ever see 4% again. Um, Okay, so as far as selling goes, if you're selling to buy, that's great. Right now is a great time to do that. Selling your house to buy a house, whether it's in town or out of state or whatever. Something that has been more common recently to get accepted is contingent offers. You just got to have your house ready to go. When I say contingent offers, I mean contingent on the sale of a home. So have your house ready to go, maybe even on market, um, and then get that offer in on the house you like. And it is a possibility. In fact, one of the escrows I have right now, which I'm the listing agent on, my buyer accepted a contingent offer, an offer contingent on the sale of uh, that person's home, and everything is currently going well. uh, Now, if you're thinking about selling like an asset, and you're waiting it out to, maybe you're thinking you want to, you're retiring, or you just don't want to be a landlord anymore, or maybe it's like in something where I work a lot in probate. And if you have anything going through probate, you should contact me. I have a guy who will save you a lot of money, just doing the probate. But if you're thinking you're going to wait, I think you're blowing it. Right now is a great time. Just get it on the market as soon as possible. Reach out to me if you'd like me to figure out if you should do anything to prepare a property. You usually have to do at least a little bit of something to prepare it to go on market. But and let you know what I think for a target list price. And all a list price is a wish price, or something to attract a buyer. Sometimes they're low in order to attract a lot of buyers and build up. And I don't like to use the term bidding war because it's not really exactly how it is, but multiple offers, so maybe you can counter offers. If you list too high, you're probably not going to get many offers, or if any offers at all. But it's always something to consider when listing a home. Pricing is important, and just because you're talking with one agent who says the highest price doesn't mean that is the right one to go with, because ultimately the market will determine the price. You could price a home at $1, and you're probably still going to get the same sales price as if you priced it maybe to what the comparables say. But I recommend being more transparent in pricing, not going with $1. I think that's ridiculous. Now, as far as the health of the market, I think we're going to see it continue to improve in value. That's not really great for or in pricing, in increased pricing. It's not really great for people hoping for a dip. And really, like I said, don't time the market. It's not going to end in your favor. Now, there are things that can happen, of course, that can cause economic turmoil, which would cause a price dip. But I'm not really seeing anything like that right now, even though, that Silicon Valley Bank failed. And there's a couple other banks kind of in trouble. And it's because of certain investments they made, and regulators not actually doing what they're supposed to do. There's a lot of weird media buzz about things, and people love to get in their little political corners. But regulators did not actually follow some of the regulations, and were not actually doing their job in some cases, is really what that boils down to. But overall, the market looks pretty healthy. And you saw my graph for the foreclosures. Foreclosures are near all-time lows. We're looking good. So great time to buy. I mean, if you're thinking of stability, buy. Go out, take a look. You want to get pre-approved first, so you know what to look at. And if you're looking to sell, great time to sell. You're not going to be on the market very long if you do it right. You're not going to have to be, constantly, cleaning and getting ready for a showing and making all the beds and all that, like every day for months right now. So get that thing on the market. I think you're going to be very successful with it. Reach out to me anytime. My info is on the channel. I am Brendan Mohr, the Realtor, and thank you for watching the May 2023 Sacramento Real Estate Market Update.